Good morning, guys. What's up? How we doing? You are currently looking at a 5-minute chart on the Nasdaq December futures contract. That is NQ. We are 3 minutes, 55 seconds out from the rollover. And right now, I am looking for any reasonable price action setup to do most likely something to the short side, but we will see. Good morning, guys. How we doing? Scott, Stealth, Brandon, Juan, what's up, guys? Good to see you. Let all the regulars come on in here. Good to see everybody. Good morning. And let's get to work. Javaz, how we doing? Outlaw, Kevin, James, Giovanni, Joe. Good morning, guys. All right, 3 minutes out. How are we trading so far? No one cares to share, huh? Is it that bad? Halfway through this 5-minute bar, 2.5 minutes out. John, up 29 points. Very good work. All right, less than 2 minutes out. Let's see what we get. For me right now, any clean bare body, I'm interested in a scalp. ATR is 29, which is reasonable. But when the market feels a little heavy, meaning the bigger bear bodies are coming a little easier than the consecutive bull bodies, a sequence like that I would take for a scalp. Not a swing, but a scalp. And maybe see if we could take out some stops at low a day. So what I would need to see here in the next minute, 6 seconds, is this body turn into a nice bear body, closing like down here. I'd risk the signal bar and look to take out some couple of stops. So it's not going to be a lot because it's a short-lived level. Maybe put my take profit like right above 90, maybe right below 90. All right, 50 seconds out. Let's see if we get that. And I will take it if we do. And if not, we'll go next bar. Hmm. 12 seconds. I don't know. Oh, we're not going to get it. That's all right. That's all right. Next bar here. 5 minutes. First payout from Apex after 4 years. Hey, number one's number one. You've done it once. Now go do it 1,000 more times. All right. All right, same idea here. If we can get that out of the bears. Oh, by the way, haven't even shared this with you yet. Apex extended 80% off, which is huge. They went to 50 for a day, and then they're like, let's give the people a little something. So they're back to 80% off and single day pass. You can pass in 1 day at Apex and be funded tomorrow if you use code BIG, B-I-G, and that'll, again, 80% off the top as well. Cheap, cheap, cheap evals. And it is a beautiful thing. All right, 3 minutes out. Oh, not to mention, they, again, $85 lifetime activation fees instead of $140. Lifetime activation fees across the board are $85. It's stupid. Go hit it. It makes the numbers look a little too good. They might regret this one over at Apex if I have anything to do with it. All right, 2 minutes. 15 seconds out. Let's see if the Bears can get it done. I don't know if they're going to. We'll see the Bulls bring this back up toward the 20 EMA, and then we'll see if we can get a test of that, how that goes. Stealth, appreciate you, big dog. All right, minute 25 out. Oh, Rose! Should know this by now, big man. Big! B-I-G, baby. One of the most important words in the English language. All right, 40 seconds out. Bulls trying to take this baby up for a test of the 20 EMA. All right, new 5-minute bar. Let's see. Let's see what we get. You know, you got to think that the Bears are probably going to at least try to step in. But I'll tell you what, if the Bulls end up stepping in harder through the 20 EMA, and honestly, this would be a really big deal. If the Bulls could give us a close with a sequence, though it's a lot of points. It's a big ask to make. It would honestly just be easier for us and quicker if we could just get a rejection here, get 2 bear bars, closing near their low and short for a look through the low-a-day stops. So let's hope for that one. Gives us a setup a little bit quicker. Francisco, do you watch volume or bookmap or something? If I was going to watch either, I would watch volume. Though, you know, more information is great. Okay, if you can pay attention to volume, tremendous, fantastic. But I've made this comparison many times. There are above and below board factors depending on what security you're trading. If you're trading a little crypto coin, small cap stocks, volume is crucial. Very, very, very above board. Want to pay attention to that. You're sailing over a coral reef. You want to watch the depth gauge. Because if you hit coral, you're fucked. Middle of the Pacific, you might be, you're not coming home, maybe. But if you're in deep water in the middle of the Pacific, you're over the trench off the coast of Japan, you're worried about bigger things maybe than the depth gauge. If your boat has, what's the word, of a couple of feet under the water, right? I forget the word. You're not too worried about that. There are bigger things to be concerned with. Potentially weather. Waves. Sharks. Potentially, if you're going swimming. The depth gauge kind of takes a back seat in that case. Now, the coral reef is small cap stocks. Right? They're not that deep. You want to pay attention to volume. Little crypto coins, if you're trading them. Volume's a big deal. In futures, you can put out really big orders and they get gobbled right up. There's always a lot of volume on a lot of bars. Obviously, there's more at the open than there is at 1 o'clock usually. If you can watch it, great. But there's opportunity costs in taking in information into your brain on every single bar, right? So if you can pay attention to volume and it's important for you, do it. If it seems to eat up mental capital that you could use on something else, maybe a little more helpful for your trading, scratch it and do that. Yeah, John, it might be draft. I think that's the word. All right, minute 12 out. All right, Bears. See if we can flip this to a bit cleaner of a bear body. And then give us number 2. "12 seconds. New bar here. Now we gotta be careful because this could become a thing. At least temporarily. We could just see this become a little trading range. But those small trading ranges inside of a bigger trading range, which you could argue is just this whole thing. There's all context, right? There's no right answer. There's just what's most probable. These little guys take a back seat to the big guys. Okay, they're shorter lived. But you could also say, I think this is the look. Which right now I would say is most probable. Which is why I would like to get short if we get a bear body closing like here. And realistically, you should probably bring this guy in. Don't overthink it. Doesn't matter. 3 minutes out. Come on, Bears, get it done. All right, what do you guys think? We're going to get the opportunity to ramp through some stops. Some low-a-day stops. Need these bulls to clean... I'm sorry, these bears to clean things up for us a little bit here. I don't want to see it close inside of all three of these wicks. It just shows a little too much insecurity for me to be cool with. But if we can get it closed beneath, like 25.21... then I'll look to get short with a stop limit sell on the close and rollover of this bar. 2 minutes. Yeah, I like that a lot. Let's see if we can get that. Okay, let's clean this up. We know that that's there. Minute 20 out. Come on, Bears, get this thing done. All right, 35 seconds out. I'm going to get ready just in case. Copy trader engaged. My cursor, right at 25.21. I want to see this bar close beneath that within reason. And if we can, I'm looking to get short. So, let's get this guy ready. That is a stop limit sell. And can the Bears get it done? They're not going to get it done. Okay, we'll cancel that, and we will go next bar. Same idea here on the next bar. This next bar would be tremendous as well. Maybe even better if we could get this as a bear body closing near the low. And we get it done. Four minutes. Come on, Bears. Let's show a bit of backbone here. And get this thing moving. So we can do our job. Peter, how we doing? Good to see you. All right, less than 3 minutes here. Let's see if the Bears can hold this up. Got to see a nice low close. Somewhere down in this region would be... Bears, slow it down. Calm down, Bears. Oh, you're taking all my potential profit. I'm still cool with where it sits. I cannot see this thing take out that low because that eats up my stop hunting mentality right through 25K too. Hold it there! Don't go without me. I need to enter on a bar rollover. If it goes without me, I don't care. It's fine. Let's see if the Bears can hold this baby off until the close. But that right there, that's the idea, playing out without me. We can pretty much right off the 25K, so I'm still okay with it. I would likely end up using a limit here. Well, 1 second, let me look at this. 90 seconds here. All right, I would need to see this bar close somewhere in this region. That's too high for me. Wick's too big. Bull stepping in too aggressively here. But if we could see a close, they got to thread the needle. I would short it with a limit. If they can still hold it above 25,000, I'd put a stop limit sell right at like 25 or 25,000 and a quarter. And see if we can get filled for a quick push through. We'll find out 55 seconds out. Honestly, since our back's a little against the wall, since they took a lot of our potential without us, I would not mind at all selling with a limit on the rollover. But again, it would have to be closing near the low. The bigger the wick is, the more likely I am to use a limit sell on the rollover until the wick gets too big for me to enter, which it still kind of is here right now. So, 20 seconds out. Copy, trader. Ready to go. Need to see this wick get smaller. Bulls are stepping in too aggressively. 10 seconds. That's the wrong way. That's not what I like to see. Let's see if the Bears can give us a last second solution here to the downside. And they are not going to ugly wicky 5-minute bar. So we will go next bar here and see what we end up with. Let's just take the look in as it comes. That was a weird bar. So now those of you that are like, well, why didn't you just short it while it was going? That's why. It makes the decision making too complicated if you're open to making decisions at any point on any bar. I like my decision making to be simple, so I'm not stressed. I don't worry about anything. You can still make lots of money and do very well. You didn't get, at the end of the day, you didn't become a trader to just sit down every day and despise what you do and be exhausted at market close. I mean, it's not, you're thinking a lot as a trader. It's not so easy, right? But you didn't try to do this. You're not attracted to this lifestyle so that you can hate what you do and not do very well and be thinking incredibly hard every second all day and working much harder than you probably currently do, at least mentally, at a job, not physically, of course. That's probably not why you're here. I mean, that kind of sucks, right? So, plus, you probably aren't going to be profitable if you're that loosey-goosey with it. So I like to wait until bar rollovers to make decisions for entries, early trade management, things like that. Now, profit taking is a little bit of a different story. But you guys have seen all this enough by now. You know what's up. All right, let's pop to the 2-minute. We have comments about a potential 2-minute setup that I will not take because of this trading range. And that 2-minute bar would have had to close up here. That's the bottom of the lower third. I mean, sorry, that's the bottom of the top third of that trading range. So for me on the 2-minute, that is not a setup. Back to the 5. Okay, now we'll get, we're looking at the 5-minute. What starts to get kind of interesting here is that notice how we got this slow grind bull push and then a bear collapse. Slow grind bull push and less of a bear collapse. Can anyone tell me what I'm thinking right now? I know one of you out there is, one of you knows for sure. What am I thinking this is turning more into potentially? Now this could change in 10 seconds if we see some kind of big move. No, not a reversal. Not yet. Not yet. I would not be convinced of that at all yet. What am I thinking? Trading range! Gun, one eye, David. Yes, I'm thinking trading range. I'm thinking this probably goes sideways for a little bit. Now, again, it can change in 2 bars, and I'll happily put a trade on. But this has me starting to think sideways, which needs to kind of change how we trade a little bit. Now, by the way, that thought for the trading range, that right there, that is exactly why context is one of the most important pillars within RAM, within the entire framework. If you ignore context, you are fucked. I'll tell you that right now. Everybody ignores context. They think plug and play system, boom, I'm worth 80 million overnight. Jesus, guys, come on. It's not overly complicated. It doesn't need to be, right? I'm not trying to make trading sound easy or incredibly difficult. It's just different than what everyone's trying to tell you. Not everyone, a lot of people. Because they want you to think it's plug and play, because then you'll say, okay, cool, here, take my money. Without context, it didn't work for me. Okay, straight up. Context is everything. One of the most important pillars within the entire framework. Don't ignore it. Listen, there's no setup that's going to pay your bills every single month forever. This one setup will do everything. Now, there are really good setups in intraday trends and really good setups in intraday trading ranges. Those can do just that. But notice that we have now introduced the magic word context. And I don't get it. I honestly don't get why everyone chooses to ignore this. It's not like it's so complicated. It's not like it would tank sales of a course if you just said, hey, we have to pay attention to what the fuck actually is going on in the market. I don't get it. It's just, I feel like it's disrespectful to everybody to just say, here's the setup, trade this and you win. I don't know, man. It didn't work for me. I couldn't make it work. I consider myself a reasonably smart guy, and without context, it's all just fucked. Nothing works. If you try to trade a trend in a range, you're going to get screwed over. If you try to trade a range in a trend, you're getting run over, blown up in one day. Whole lot of pain. Whole lot of trial and error. A whole lot. You guys have no idea. All right, 90 seconds out. Let's see what we get. A lot of little trading range activity here. Thus far, kind of sitting right around the break-even point on the day, as far as NQ, right, the Nasdaq. So, you are expected to see a little bit of hesitation as the bulls and bears try to decide which way to take this thing. Again, sitting right around that break-even point. I think they're a little confused. $40 seconds. Okay, Bo, this is a very good question, Bo. Is there something about the 10 a.m. central bar that would have stopped you from taking the continuation short on the 5-minute? Bo is asking, hey, is there something about this bar here that would stop me from getting short? Bo, while I was waiting to start the live, I had a stop limit sellout for 30 seconds and I did not get filled because this happened. And when this happens, I don't want to participate. We did not take out the low of that signal bar, which is why on that scenario, I do not just sell with a limit order. I put out a stop limit sell down here because I need the bar to take out the wick low of the previous bar. And if it doesn't, I don't want to participate. It didn't. I pulled it. And then this happened, which is exactly why that's a rule. People say, why do you do these things? It's kind of arbitrary. No, that's why, because that happens. If you take out the wick low of the previous bar, the probability of the trade working has gone up by, I don't want to say tremendously, because it's never going to be like 98%. We don't live in a world that's even possible with markets. Has to be both sides. But it goes up by a considerable degree to take you from either break even or net negative to a positive expected value. Just using a stop limit instead of a limit order for your entry on a setup like that. That's why. Very good question. That was a very intelligent question. Good. All right. 3 minutes, 55 seconds out. See what we get. All right, now the context here. Now again, you have to remember we live in a fog as traders. You just have to do the best you can, but don't ignore the context. This right now is probably the context here, right? You could also draw this. Don't overthink it. Do not overthink it. Just draw it. The sloppier the better, man. If this is the context right now, if we see a bull close like here, if you're like, hey, Nico, you have to do something, I'm going to short it. There's not a chance I'm buying that until we get another bull body closing like up here. Then I'll think about buying it. But in that case, you got to start thinking, hey, maybe we end up seeing something like this, right? And then I'm sitting long up here, so a little pullback in while I'm in the trade is reasonably expected, right? So you think, okay, how long is that trade going to take? Probably a little longer than a regular like continuation scalp. I hope this like this is so second nature at this point. It's just put on trades to the best of your ability, accept the outcome at the end of the month. Hey, if you have edge, if the sample size got big enough, you're going to be in the green most likely. This is so second nature, and I hope these things are starting to become more clear. Like when I say that, okay, if we get another rollover and a bull body push up here, time to get long, right? Immediately you should be thinking, yeah, probably. However, you know, you got to start thinking about this, right? So can't expect that trade to necessarily, if it works in 30 seconds, great. But it might pull in a little bit, and that's why you risk the signal bar. And just ideally, you get a slow grind higher. That happened to us twice yesterday. Ended up working, but took its time, and that's okay. Now this bull body is getting a little strong, so let's see how that closes up. Minute 42 out. Now I know some of you guys are out there, and I know that you're confused, and that's okay, but I know there's a lot of you guys out there as well who are watching this, and you're like, this is the first trading theory that actually makes sense in my brain. We're not relying on indicators. We're looking at, hey, what's the market doing? And trying to make highly probable, or at least higher than 50% with a 1-to-1 reward to risk, probability decisions over and over and over and over again. Don't give a fuck about any one trade. Why does this make so much sense? Yeah, I get it. You think like I do. I know. When I started thinking this way too, it was like, holy shit, this is actually kind of making sense. This isn't just a bunch of hand-wavy horse shit. It makes sense that if I use a stop limit sell below the wick low of a bear sequence, it's already going in my direction. It's a continuation trade. Isn't that what I want? Doesn't that increase the probability a little bit? Which is all you need. Do things that are logical. Do things that make sense. Okay, decent little bull body. Now, the fact that we're in this big range, I'm going to need one more. So let's get rid of this and see if that becomes a thing, because the risk of this pulling back into that trading range is still a little high for me to get long. I want to see one more bull body. If we can close above here, maybe we are getting long. But even if we're closing like up here, I'm still probably getting long, because that makes enough logical sense. 4 minutes, 50 seconds out. Beautiful push, bulls. Let's see if we can keep that up here. All right, 3 minutes, 40 seconds out. The bulls can close this up. You know what we're doing. You know what that calls for. Vonnie Joe, what percent would you say are those 5-minute tops around 9:30 Central? Yep. In your decision-making process to go long if this closes with no wick. No wick at all, Joe. I'm getting long and I'm thinking about those. But, I mean, again, logically, what are we probably looking at here? We're looking at probably either at least a pull into the 50% retracement point, if not further. We're probably looking at either this, which would be a problem, or we're looking at this, which could be a problem temporarily, and then maybe we get that slow grind anyway. But if we push through the 50% and this, then the upside is tremendous. So this is pretty far back. I don't think there's a lot of stops. I mean, there's going to be some stops, but most stops are probably going to be back toward the open, at least for people who are sitting kind of always in like full day short positions. They're going to put their stop near the high of day. People are very predictable. Algorithms are very predictable because you have to be, because trading price action, that's what is the best way to do things. So if you can find the enemy's stop losses, you can use them as liquidity. We do it all the time. It's a huge booster. All right, minute 42 out. All right, so this closes up nice and clean. I will put out a stop limit buy. Because this drive is very, very strong. Risk is reasonable. Not like this bar is, 100 points. So if we do end up coming into a little top here, we're looking at what? I don't know, 20, 25 points. It's no big deal. We can risk that 100%. ATR 27. 38 seconds out. Copy trader engaged. Let's see if we can get a nice couple of consecutive bull bodies. Need this one to close clean. Do not want a wick like that. Giving us a good example here of what I do not want. I want this baby to pop back up, close at or very close to the high, if not grow a little bit. We have, again, this little flat top of a big potential channel. I'm willing to get long in the face of that because this consecutive bull body sequence is so nice and strong. And we have not seen very much of that today. 5 seconds, see if we get close. Yeah, it's okay. I'll give that 30 seconds, see if we can get a fill. That wick is just barely not too big for me to not put it out. Well, for me to put it out, I guess. 20 seconds. I want to get quick resolution on the idea, and if we don't, pull the order, move on. But if the bulls can pop it through here in the next 10 seconds or so, first 30 seconds, the 5-minute bar, right? Then I'm sitting long for a push, risking just the signal bar. Tight, tight risk. No big deal. No trade. No fill, we'll move on. Next bar here. 4 minutes out. Yeah, Tenzin, no, not really. I mean, I throw out a 20 EMA on the 5, but if you're like, hey, you have to pull that, I'd say, okay, I don't care. Just really don't. I mean, it helps me stay out of trades sometimes, but it doesn't come up all that frequently, to be honest with you. It's out there so we don't get dizzy. I think it gives you guys, it also keeps you guys from getting dizzy. Helps kind of understand where we're at a little bit better. Helps me stay out of something every once in a while. But I just don't care. Price action is king. It always will be. That thing on the bottom, you're like, well, that's an indicator. I don't know. I think of it more of a heads-up data display. That's the average range compared to the range of each individual bar. So the ATR right now is 25 here on the 5-minute chart. That's very helpful. That's a heads-up data display. You want to call that an indicator? Fine. Fine. I don't know if I'd call it that, but you don't need them. I really don't think you need many unless they're very, very heavy self-fulfilling prophecies. Like, if you're on a 1-minute chart and you're using a 9 or 10 EMA on a small cap stock, everybody with a Robinhood account is staring at it. Volume weighted average price. Every trader on the planet is staring at it. So yeah, throw it out. But on futures, I don't know, a 20 EMA on a 5-minute chart's pretty popular. That gets enough of a self-fulfilling prophecy attitude going toward it for it to sometimes be relevant, yeah. But people put all this weight on indicators, man. It doesn't help. Volume weighted average price can sometimes help because it's so popular. But if you throw out a 17 exponential moving average on a 4-minute chart, you think any big algorithm actually gives a fuck about what you're looking at? Why would they make decisions around it? That's the only reason any of these things work anyway, is because people pay attention to them. They're not magic. They're just displaying data to you in a creative way. That's it. That's all they're doing. 50 seconds out here on this 5-minute bar. Let's see what we get as far as a close. Genuinely, guys, what's really interesting is, and I've made this kind of joke, I don't know what you call this, before. On day one, everybody who starts trading starts with a naked chart. There's nothing on it. You just downloaded the software. By month 3, everyone has 18 indicators. They bought 6 of them at $600 a pop, and they're like, okay, I'm ready. And they're so fucking confused, they have no idea. Everything conflicts with each other, and they forget to look at what actually matters, which is price action. Price and price action. That's what matters. What's the market actually doing? What kind of self-fulfilling prophecy might that create? They're looking at this indicator. MACD says this, but RSI says this. What do I do? And then they buy when RSI is 28. They're like, wow, that's a great buy. And then 2 months later, RSI is at 9 and the thing's dropped another $100 a share. If they're buying stock, for example. Like, it doesn't... Come on, guys. If there was so much edge in buying when RSI is below 30, it would never get below 30 because every institution would front run it at 32. Obviously, come on. You gotta remember, these markets are priced pretty efficiently, but futures, they're not perfect. We don't want them to be. If a market is too efficiently priced, it's like perfect. You cannot find edge. But in futures, it's pretty efficient, but it's not perfect, which means you can find edge. And a lot of that's going to come from just trading raw price action. Simplify. Oh, so to finish what I was saying, by 3 months, everyone has a million things on their chart. 3 years later, they're back to a naked chart and probably making money. It's a full circle. Everyone does it. Damn near everyone, I should say. Or maybe they have, 2 or 3. Maybe they put out a volume-weighted average price, a 10 EMA, a 50 EMA, or a 20 EMA and a 100 EMA. I don't know. I just don't really think you need much of it at all. Depends on what you're trading, of course. Again, the smaller the market, the more they can help. But the bigger the market, the more distracting they are to what really matters, which is price. 2 minutes out here from the close of this 5-minute bar. Let's see what we end up with here. Yeah, exactly, John. And then eventually, slowly, you start knocking them off one by one until you just say, I do better with none of them. And then your chart is back to looking very simple. I always struggle to explain this, but the reality here is, guys, trading is really hard. And it takes a lot of screen time to get the context and the discretionary skill to do well relatively consistently, which is what you need. Just to do well relatively consistently, right? But it doesn't have to be so complicated. Like, you guys notice, I'm always talking about simplifying. Price action, context. Make the decision making as easy as possible. Make decisions primarily on rollovers, if you can. That makes it easy. Because, I mean, what, you want to sit here and look like a programmer or a hacker in a movie for 6 hours a day? I mean, gee, the stress is going to be so high. Can't imagine you're going to live very long doing that, and it's probably not going to serve you very well. Simplify things. It helps you. And if you can simplify, but have that discretionary experience, that screen time, mixed with the context of the day and the current market environment, mixed with all that experience and the setups necessary, which are basic price action setups. You guys see me taking them all the time, all day. I think you're going to do really well. And you're going to look back and you're going to be like, this seems kind of simple, man. Like, how is everyone not profitable? But you have to understand that you put in so much screen time and you have so much experience. That's why. They don't have that. It's not simple. It's complicated, but it doesn't feel like it anymore because you simplified things. You show up, you do your job. It seems simple, but it's not. But to you, it feels that way, which means you're not stressed out, which is the whole fucking goal, isn't it? Four minutes out here. Let's see how the Bears close this up. Big old wick on that last body. Blaine, good to have you, brother. Russ, good morning. Good to see you. You know, Gold, I've never been a kicker, but I will say, I think you're probably kind of right. People come in and think it's easy, and then they realize it's really difficult. And then at the top level, I would guess, I'm just guessing here, again, if any of you have been a high-level kicker in some kind of higher level league, chime in. I would imagine at the higher level, it's just channel your experience and keep your stress levels low. That's the key. Don't get iced. Keep stress levels low. Everything is second nature at this point. You know what you're doing. Go make the kick. Right? Don't psych yourself out. I feel like that's kind of like trading once you have the experience, but you have to get the experience, which means you have to kick a lot of footballs, which means you have to put yourself in a lot of high pressure environments, which means you need to take a lot of trades and have a lot of screen time. 2 minutes, 20 seconds out. Let's see what we get. Joe, did you ever have price levels on your screen through the journey? Maybe off higher time frames before drilling down to the 5 or 2? Was that ever a phase? Yeah, of course. Joe, all you guys, maybe not everything, but damn near everything you can think of. Trading style, indicators, time frames, products, time of day. I've tried it all. I'm telling you, this was a painful process. When I say this, you guys are like, it's okay. Man, that must have been a tough 3 months. No. No. It was a fucking long time. It was a long time, and I'll tell you right now that quitting, I would be fucking pissed today if I had quit. Don't quit. It's worth it. It's worth it. It's painful, but it's worth it. The best advice I can give you is find something that makes sense to you. For example, for me, trading price action, making logical decisions, and trying to keep my trading stress-free on futures, which is a beautifully designed trading product. It was built to be a trading product and a hedging product. That's it. Makes sense. To me, okay, let's tap into inefficient markets, a lot of which is pre-market, small cap stocks that are being driven by news, a lot of self-fulfilling prophecies, and a lot of people who don't really, a lot of kind of people who are willfully kind of gambling on them because they think it's going to go from $3 a share to 30. That's called an inefficient market. Inefficient markets can offer a lot of edge, but what comes with a more inefficient market? A lower ceiling. You can still make a ton of money trading small caps, but you can make a lot more trading futures, which is why I think futures are a really good thing to kind of maybe, if you're just starting, build a backbone on, if you're trying to decide right now between one or the other, and then make it a lifelong venture for the next 80 years, however, how long everyone's going to live. I think we're probably going to live a lot longer than we think with the way medicine and AI assessment is going. This can be a lifelong journey for you, a daily challenge. It'll keep you mentally sharp through old age, and it'll make you a lot of money. But if you're like, I need to find some edge, a more inefficient market is where you'll find that a little easier maybe. Now risk is increased because it's more inefficient, so if you fuck up, you can fuck up bigger. But the edge can be a little bit bigger as well, just with a lower ceiling. With futures, the edge is a little bit smaller, but the ceiling much, much higher. The market much, much deeper. Synergistic is what they are. 3 minutes, 30 seconds out. Jacob, hey Nico, notice a shift from the 2 minute to the 5 minute. Is that just due to market conditions? But well, it's better PA on the 5. So the 2 minute, I think a lot of you guys started watching the stream during the intermission from the 5. The stream started on the 5 minute. I shifted to the 2 because I love the 2 minute for scalping when the 5 minute sucks. When the 5 minute is good, which is the majority of the time, I look at the 5 and the 2. But most of the setups are going to come on the 5. But we will pop over to the 2 if there's something really obvious staring me in the face on the 2 minute chart. And there's absolutely nothing on the 5. All right. Minute 27 out here. All right, let's see here. May have a little setup to put on. Let's see what we get. ATR 23. All right, let's take a look. 27 seconds out. Gonna go ahead, get the copy trader engaged. And let's see if the bulls can give us a nice clean close above this here wick high. If they can, I'm putting out a stop limit buy, looking to get long. And then we have a decision to make as far as, do we risk the signal or this curl? We'll make that decision quickly after we come to it. It's not there. It's not there. Too much risk of a trading range. Pull that order. Getting teased! I think that's our third or fourth tease of the day here. We'll keep it moving. Passed another 50K. Used code BIG. Gotta love it. Yep, if you're just joining us here, Apex extended 80% off, 1 day to pass, and $85 lifetime activation fees across the board with code BIG over at Apex. They extended that deal. Go hit that up. The numbers look stupid at that. I'm telling you guys. I'm telling you, I don't bullshit you about this stuff. At 50% and $140 lifetime activation fees, the numbers don't look quite as tempting over at Apex. You can still make them work. But with $85 lifetime activation fees, 80% off, and 1 day to pass, the numbers look stupid at Apex. All right. You guys see that? A little too much risk of a trading range, kind of an insecure bull close on that previous bar. So I didn't place the order. And here you go. The bear's taking it back a little bit. 2 minutes, 20 seconds out. What's up, Rovio? Good to see you today. All right, Bulls. Finally getting something done for us here, potentially. Let's see if we can get a nice, reasonably clean close. We are 60 seconds out. Oh, you Bulls, that's not what I want. "15 seconds here." Those Bears are stepping in. ATR down to 23.5. I needed to see this bull body close up here for me to enter. So, next bar. Pop over to the 2-minute chart and see what's up over there. Yeah, a lot of wicks. Not much as of right now. We'll keep an eye on that, though. Back to the 5. Do you use minis or micros? It's gonna be mostly micros. If I have a bigger account that I'm working on, it'll be mixed. Like, you know, there might be in the current position a few minis across different accounts mixed in, different bigger sized accounts. And those accounts are usually 1, maybe 2 minis. If they're bigger accounts, usually 1. But you guys know, on like a standard 50K funded Apex account, I am sitting somewhere between 3 and 5 micros, depending on how aggressive I'm approaching that particular account, and depending on market volatility. The higher the market volatility, the more likely I am down toward 3 on each individual Apex account. By the way, if you don't know this by now, I'm copy trading. And the current position that you see is in totality across whatever accounts I'm copy trading. I think some people think that it's one prop account, which is bizarre because the drawdown wouldn't even work. It's obviously many accounts being copy traded. Kevin, do you trade the same way passing evals or just larger size? I take my threshold for quality of setup on evals goes down and my size goes up. That's not the way that you should do it if you're just starting. But for me, opportunity cost is too expensive for me to sit here all day and trade 2 micros in an eval. They're too cheap. I need to pass them quickly. And that's not like, you know, whatever. That's just straight up. Opportunity costs at some point gets too expensive. So I trade the best I can. I might take a B- setup. I might take a C+ setup sometimes. But of course, if I'm working on evals in the afternoon and I see an A+ setup, obviously I'm going to throw it on. Again, it's probably not the best example, but that's just opportunity cost is a real thing in the prop trading business. So you gotta navigate that as well at some point once you're taking, you know, some money. All right, 20 seconds here until we get the rollover of this bar. Oh man, we are just wick sideways here so far in the last 20-25 minutes. 5 seconds here. Four minutes out. All right, guys. Couple minutes. I'll be right back. Quick break. Don't go anywhere. Hey, like the stream so we can give away some free shit later. Accounts. Apex. Take Profit Trader. Hit like. Let's do it. I'll be back in a couple minutes. Quick break. All right, welcome back. Minute 50 out. We just got quite the little volatile bar. So let's see what this brings. Now, obviously, this guy is being kind of a problem. That little range there. So let's break out of there. Give us 2 consecutive bear bodies closing near their lows, and get a little stop hunting mentality going toward the low of day. That would be a beautiful thing. Let's see if we can get something like that. Mars, let's go. Apex just approved my payouts. What are the next steps? Wasn't sent any additional instructions. Let me think. If it's your first time, you're gonna have to set up your banking information. How do they send you the money? Once you do that once, it's good. If you have not done that yet, you're gonna have to go and get that set up. But otherwise, once they approve it, if you already have that set up, you just wait. You wait. And a few days later, maybe a week later, depends. Sometimes it's really quick. Sometimes it takes a week, week and a half. It just depends how backed up they are, I think. You'll check your account one morning, and it'll say, Apex. And there's some money in there. Good work. Very good job. All right. New 5-minute bar here. You see that? Bulls wicket right back up. Close it inside of that little range. Let's see if we can get a better bar. Nice bear body closing beneath this wick low here, and I would put a stop limit sell out looking to get short. Let's see if we can get something within reason there. I don't know if any of you guys have noticed this, But something I have noticed as of late, I gotta say, it seems like Apex is getting a little quicker with the payouts. It seems to me that on average, the approval is taking a little bit less time. The review in general is taking a little bit less time. And the money hitting the account maybe is taking a little bit less time. Which is obviously good to see. I like when things get quicker. I don't like inconvenient shit. So that's a very good thing to see. It's very exciting. The quicker you can get money from the market into your bank, the better. Because life is expensive. And everyone's got bills to pay. Halfway through this 5-minute bar, let's see who ends up taking this one, how we close up. Still this little trading range here. See if we can fix that. 90 seconds out. ATR 21 coming in a little bit. $30 seconds. I mean, look, guys, if you remove all the noise, I mean, let's just be real. This is what the market's doing. We need to see it break, pick a direction. And the channel itself is kind of too tight and a little too sloppy to actually trade the channel itself. I mean, it's 20 points wide. This is the job sometimes, man. That's all right. All right, 3 minutes out. And these bulls are taking it right back up toward the top end of this tiny little trading range for a test. Let's see. Let's see if they can maybe get something a little more definitive done. It's going to take quite a bit for me to be convinced. 2 minutes, 40 seconds out. Hey, quick heads up, by the way, if you haven't yet, hit like on the stream. When we hit that goal, we're going to give away a free any size Apex account. And then if we get to goal number 2, we're going to give away a free 50K Take Profit Trader test. All right, bulls. I like to see that attitude here thus far. Minute 15 out. Let's see if they can hold that baby up. I'm gonna need one more bar. One more bar for me to be convinced. And if we can get that, I am thrilled. $25 seconds. See if the bulls can hold this baby up. Give us a clean close up here. Then we need a little more information. New 5-minute bar here. 2 seconds. Beautiful close out of the bulls on that last 5-minute bar. That's a very good thing to see. Now, I need one more. One more similar size bull body. Substantially growing, might get a little big. But anything but that, and I cannot buy. Because the risk currently is still far too high that the bears just fade this baby back into the trading range. Which is already what they're trying to do. Three and a half minutes out. Bulls not really getting the job done thus far, but lots of time remains here on this 5-minute bar. Let's see if the bulls can take this baby up through, give us a nice clean bull body close. And Then I am punching long with a stop limit buy. But this is not what we need in order to do that. These bears are trying. And the bulls don't seem to be putting up too much of a fight. HR 20. If you're just joining us here, quick heads up, Apex extended 80% off, 1 day to pass, which means you don't have to pass in 1 day, but you can and be funded tomorrow. And lifetime activation fees for past accounts are down to 85 bucks instead of 140, all with code BIG, B-I-G, over at Apex Trader Funding. Again, numbers look tremendous while this deal is going on, so go hit that. All right, less than 2 minutes out on this 5-minute bar. Need to see the bulls clean this thing up, man. Way too much risk of this range continuing to play out if they can't do it. Which is why I did not buy this rollover. I need one more bull body push, and then I get long using a stop limit buy on the rollover. Minute 37 out. Come on, bulls, get it done. Do we get that last second adjustment? "55 seconds. Come on, bulls." Take this baby through. If you get a Apex payout request denied, you just, no, they don't pull it. You just keep trading, and then you can request again. After you hit the minimum trading days again. All right, 8 seconds here. Oh, you bulls, I don't think we're going to get that last second adjustment. All right, a lot of hesitation here out of the bulls. We will go next bar. Not against the similar idea, by the way, since this last bar here was a doji. But again, that trading range risk is just too high. That the bears faded back in to get long right now, at least for me. One big bull body and that changes. So let's see what the bears can bring here. If they can hold us in. Most common reasons for payout denial that I see around the prop trading world at Apex. These are the two. I mean, you obviously you want to follow all the rules, but these are the two that I think cause denied payouts the most. You leave an unrealized loss on too deep, and it triggers past that 30% of your drawdown on an unrealized trade. You can stop that completely by just sizing yourself properly, a little smaller, and respecting your stop losses. And number two is requesting a payout when one of your days was more than 30% of the total profit. Okay? Meaning, you want to just be consistent rather than having big blow-up days, like blow up in a good way, where you make tons of money and it makes up 75% of the total profit on that payout request. No, it's got to be below 30. Those two are the biggest ones in that I see around. Obviously, you need to follow all the rules, but those two are the most common, because I think they're the hardest for people to pay attention to for whatever reason. All right, Bear's trying to fade this baby back into the trading range, like we talked about. All right. 30 seconds out. All right, the last bear body, closing basically at the middle of the range, also happens to be the 20 EMA here on the 5, though I think the range is, I think the range came first before the 20. 20 just happens to be there due to all the volume happening inside of this little trading range, which puts the 20 EMA right about there, right? So, we really need one or the other to take this thing out of this trading range, give us a couple of consecutive bodies, and then boom. That's a beauty of a price action trade. Now, there are a few other scenarios, of course, as this range attempts to widen out. But we'll take it as it comes. Okay, now, in a sideways trading range like this, I know a lot of people want to know, hey, what's the bias? The bias is there isn't one until we get some kind of attempt. Now, what does an attempt look like? It's going to look like 2 consecutive bull bodies or 2 consecutive bear bodies, if not 3. 3 would be tremendous, depending on how the first or second one looks. And I would love if we could do it to the bear side so I could stop hunt the low a day, right? That's a huge backbone, I don't know if you'd call it a pillar, but stop hunting is a huge part of RAM in general. It really, really contributes to edge when you can structure something that makes logical sense where you're hunting stop losses of the enemy. But I don't care. If we end up doing it to the long side, I'll take a long, don't care. But when you're in a sideways trading range, the most dangerous thing you can do is come up with some bias. Okay, whether heavily long or heavily short, because if we're being honest, the market's going sideways because the market can't figure out what the bias is, right? If the market can't figure it out, especially through here, how the hell am I expected to figure it out? But that can change really quick. In 1 to 2 bars, all of a sudden that all changes and we got to trade on. So, it's coming. We just got to be patient. All right, new 5-minute bar here. If I hit my profit target on Take Profit Trader, I assume this is a test account. How many days can I flip out of the 5 days? Yep, so it's a test account. As long as you didn't do more than 50% of the profit target in any one day, you can flip as many as necessary. Now, more than likely, if you hit the profit target in 2 days, it's pretty likely that one of those days is going to be over 50%, which means you have to make a little bit of money on a 3rd day. And then if you're in that situation where you hit the profit target and your biggest green day is not more than 50% of the total profit target on a Take Profit Trader test, any size, then you can flip the remaining days and still pass. All right, 3 minutes, 15 seconds out. Let's see, can somebody put something together? Roy, right now it's going to be TPT and Apex. I'll let you know. I'll let you know. Crown, Nico, how do you determine whether to trade the range instead of waiting for the breakout? The width of the range. If there's enough room inside of the range, like let's say the range is 60 points wide, then you'll have enough room to get little reversal sequences. Like, for example, 3 consecutive bull bodies, doji bar, and then a bear body closing beneath the wick low of the doji. And then I can sell short using a stop limit sell inside of the range, looking for a reversion back toward the center of the range, if not the top third of the lower third. Sorry, if not the top of the lower third of the range. To cover risk to a reasonable degree, risking the signal bar, if not the curl of the wick high on the doji. Here, the range is too tight for any of that to occur, for example. And when the range is tight, it's really hard to make a logical decision as far as how much do you risk, because the rubber band is small. It gets taut very quickly. It's 20 points wide, right? And then when you pull on back, 6, 8, 10 points back toward the middle of the range, now the rubber band is loose. It's really hard to put a trade on where you're risking 6 points, 8 points. So you end up going pretty heavy negative reward to risk, which is not bad. You can do that as a scalper. Scalpers do that a lot, actually. Go negative reward to risk, high probability. But in a range that's this tight, especially with this kind of garbage going on, it's really hard to find edge. A lot of traders, when they see this, they say, good, the market's finally a little slower. I can trade because I'm no longer scared. You should be scared of this. This is the hardest point to find edge right here. The market doesn't even know what to do. How are you supposed to figure out what to do? Big old flat top right here. Let's see if the bulls can finally get the strength to push through there. Three and a half minutes out. All right, if the bulls can pop this baby a little bit higher, which would increase the size of that signal bar, all of a sudden I'm going to find myself trying to get long with a stop limit buy. Let's see if the bulls can do that. It's gotta be reasonable, at least the size of this bar. Gotta be reasonable, otherwise there's too much hesitation, too much risk of just backfilling the range. If the bulls can take a little more control, I have a little more confidence in the bulls to keep it moving right out of the range. This here, those bears are like, trading range. And I don't like the bulls letting them do that. So, minute 40 out. See if the bulls can clean this up. All right. 52 seconds out. Come on, bulls. Oh. Those bears are saying, trading range, trading range, trading range. Just need the bulls to grow some backbone here and push us with a clean close near the wick high. And all of a sudden, I have a stop limit buyout, but I refuse to do that unless I'm convinced. Because this trading range takes precedence unless we see something convincing. And this is not something convincing for a bull, at least not yet. 13 seconds. All right. Man, who's going to win this battle? What do you guys think? Let's do a poll, but let's do it in the chat. Just say bulls or bears. Who's breaking this baby out? Because this is a brutal little trading range. And I think we need to take a crowdsourced data sample. Bull, bears, bulls, 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 bears, bears. Ooh. I think we're a little heavy on the bull side. That's not an opinion, that's just reading the data here. Seeing a whole lot of bulls. Or maybe 70% bulls from in the chat currently. Interesting. Yeah, Vinny, I agree. I think you're right. Joe, I am in that boat as well. I don't care which way it goes, just break and give me a setup. The beauty is we're never really, further away than within 5 minutes of putting out a trade. It's just this here. This is not positive expected value trading here on this 5-minute chart. Two minutes, 40 seconds out. Minute 25 out. All right, Bulls. All right, Bulls. Give us a close above that previous bar's wick high. Give us a second bar, ideally growing, if not the same size. Be similar, depending on the size of this bar. The bigger this bar gets, the more leeway I give bar number 2. And all of a sudden, we might have a setup on our hands. 60 seconds out. Let's see what we get. Very good, Bulls. Finally, something a little more definitive. 15 seconds out. Very good close, Bulls. All right, 5 minutes out here. Next bar. This could be the bar of our dreams. As far as getting a setup, if we can get a nice bull body closing near the high within reason. All right, Bulls. Good start, kinda. 4 minutes out, lots of time. Lots of time to clean this thing up. Give us a nice clean close near the high. That's what we need. Yeah, that's right, Joe. I mean, listen, guys, you know, some days you're going to be a couple hours into the day with no trades under your belt. That's okay. People are always leaning on the one or the other, black or white. Gray area is where the money's made. And some days you're going to be 2 hours in and you're going to have 11 trades under your belt. That is also okay. It's just a different market environment. It's a different day. It doesn't mean you undertraded one day and overtraded the other. It just means if your edge didn't present itself, you didn't take anything. If your edge presented itself a whole bunch of times, you did your job and you put it on. We're still watching every bar. We're working just as hard. It's just a matter of opportunity that happens to present itself that day. So, 2 minutes, 50 seconds out. Let's see if the Bulls can give us that opportunity here. All right, 90 seconds here. Let's see what we get. All right, ATR 18, a little bit low. Jackson, I'm using Ninja Trader. That's what you see right here. Ninja Trader. Okay. All right, we ready? 30 seconds out. Copy trader engaged. Need to see the bulls take this baby a little higher. Clean this bar up. This right now is ugly. I need to see that wick get swallowed up here by the bulls. Give us a nice clean bull body close near the wick high of this current bar. We need that last second adjustment. I mean, I'll get ready. Today's been a little light on opportunity, so I want to be ready to snatch up anything that comes. Last second adjustment, and I'll place it. We will not get it. That's going to close as a doji, which means we move on and go next bar. Looking for that opportunity. Let's clean this up. All right, next bar here. Bear's trying to take this baby right back into the range. That right there is the risk. It caused us to obviously not place that. We did not get what we were looking for at all in that last bar. Yeah, Caden says, any advice on getting over the I have to make it back thoughts when sitting red or ending a day red? Caden, the reason that you're having those thoughts is because you're unsure of yourself in your trading. That's I know you're like, no, it's not why. That's why. Think about it for a second. If you have edge and you had a whole bunch of data that said you're a profitable trader pretty consistently, and you have, you know, some money under your belt or some payouts under your belt or whatever, some past evals that you didn't just get lucky on under your belt, you're able to fall back on that data or that track record and say, the longer I do this, the more money I make. And also, the longer I do this, the more discretionary experience, the more screen time I get, which makes me only better. And therefore, the money that I make compounds also because you're getting better as a trader on top of just the sample size playing out. You need to think of trading like the same business model that a casino is running against the player. You as a trader are running that business model against the big pool of money that is the market. Having a small statistical edge that you take advantage of, that you exploit over a big sample size. Casinos have a small statistical edge that they exploit over a big sample size, right? That's exactly what they do. That's what we're doing. So when you have that, you're able to be red on a day and not care because you know that, okay, the sample size didn't work out. I took 3 trades today. It's tiny little sample size. If the casino dealt you 3 hands of blackjack, do you think they're tripping if they're down at the end of that? No, they're worried about what happens over the next 30,000 hands of blackjack. They don't care about 3. You get nervous about being red because you don't have that. So how do you fix that? Well, for a little while, at least a couple of weeks, you're going to have to size down, really pay attention, not break any rules, get clean data that you can look at and either adjust if you're not profitable or look at and kind of use as a baseline that, hey, I actually have some edge here. This is working. The bigger the sample size gets. And then you can fall back on that. And then when you have a red day, you're not tripping about it. You're not worried. Because you're like, okay, this is a sample size issue. I dealt 3 hands of blackjack to the player today. The casino is not green after 3 hands of blackjack all the time. In fact, they're often red after 3 hands of blackjack. 20 seconds out. Let's get ready here just in case. So I'm likely going to need the next bar because this one is, again, not doing too much. Closing closer to a doji than anything more definitive. All right, big ol' inside close. And we go next bar. Story of this little channel here. All right, back in a couple of minutes, quick break. Don't go anywhere. Hey, if you haven't yet, like the stream. Once we start hitting those goals, we're giving away some free eval accounts for Apex and Take Profit. So let's hit those goals and take this slow day and have some fun with it. All right, welcome back. We just got quite the little volatility pop. Very, very good to see. And let's keep an eye on this. We are 2 minutes out here from the close of this 5-minute bar. Now, the 2-minute chart has had a few in the last little while, consecutive bull bodies, but every one of them has failed. So for me, I am waiting for the proper setup look on the 5 for me to get long. On a day like today where the market is rather indecisive, I think my edge is potentially a little bit less, at least until we break out. So I can make it not the case if I wait for something that looks incredibly familiar to me and I can make instant sense of. So that's what we do. Minute 25 out. Let's see. Can the bulls close us nice and high and then give us a second consecutive bull body, and then boom, I am punching it using a stop limit buy. Let's see if we can get that. "28 seconds. Come on, bulls. Don't you let us down now." ATR 18. A little low here on the 5-minute, but it could be a lot worse today given the price action. I'll take 18. All right, big bear fade right back down toward those previous 3 kind of doji bars. Close to doji bars on all 3. And next candle here. Let's see what we get. All right, less than 4 minutes here till the rollover here of this 5-minute bar. Well, I suppose, right? Let's pop around a little bit. Let's take a look at the 2. Yeah, I mean, honestly, exactly what you'd expect out of the 2 from looking at the 5. Take a look at the 1 minute. Yeah, they all look the same. They're all exactly what you would expect. There's just no getting around that soft little bull channel. Might as well pull up a 3. Do any of you guys trade off a 3-minute? I actually don't hate a 3-minute every once in a while, but much more of a 5 and a 2 guy. All right, we're back on the 5-minute here. Less than 3 minutes out. Yeah, we got a couple people looking at the 3. All right, 60 seconds. I know one trader who trades the 12-minute chart. You know, with time frames, aside from the self-fulfilling prophecy mentality of like a 1 minute and especially a 5 minute because it's so popular, a 15-minute, an hourly, of course, a daily. New 5-minute bar here, by the way. You know, I think you could trade a 12-minute. You can trade a 3-minute. I've seen it done with great success. I've seen traders who made more cyclical, but I've seen traders make millions of dollars on the 3-minute. But they're not using a 17 EMA to make decisions. They're just trading price action. This is a little more common in like the small cap world where a 3-minute chart for some people makes sense because a 5 isn't quite fast enough, but a 1 minute is maybe a little too quick for their price action trading. You can trade any time frame you want, but if you want the self-fulfilling prophecy effect, you're going to want to go with a balanced time frame. A 5-minute is a great choice. More importantly, though, it needs to be a good balance for you between quantity of setups that it gives you and quality of those setups. Okay? And really the third factor is, can you make good decisions on that chart all day? You want to pick the quickest chart you can that you can make good quality decisions on the entire day you trade, day in, day out. That's why a 15-second chart would be great, but it's too quick to make good decisions on and think everything through properly for 6 hours a day, right? If you're going to trade the whole session. And plus, you know, the quality of the setups goes way down. The quantity goes way up, but the quality comes down. Can you maintain an edge as the quality dips? Is also a big question. All right, halfway through this 5-minute bar, 2.5 minutes out. Here's a 1-hour chart, by the way. Hanging out right at this wick high here. Big old wick on that bull body. Still about 7 minutes left there. Back to a 5 for us. Okay, Matt, interesting question. Is there anything to even versus odd minute charts? Meaning like, for example, a 6-minute versus a 7-minute or a 2-minute versus a 3-minute. I think not really, no. No, because certain rollovers on an odd chart are going to be even rollovers, right? Like a 5 minute, technically an odd chart, but half the rollovers are going to be even. So no, I'd say no, not really. All right, 4 minutes, 40 seconds out here. Bears trying to pull it all back to the 20 here on the 5. Yeah, nothing more, nothing less than a self-fulfilling prophecy. Let's see if they can pull it on back. I imagine a lot of you guys are doing the same as me today. A lot of this. You know, that's the job. That's part of protecting your positive expected value. That's part of protecting your statistical edge, which is everything. You know, if you end up doing this primarily as your main source of revenue generation, you know, at least in the early days, later there might be more added. Take profits, you make other investments, whether they're angel type stuff or real estate, if you're into it. But everything you build is going to be built off the back of your edge, so you protect that with everything. Now that doesn't mean we won't take 12 setups in 2 hours if they come. It also doesn't mean that every once in a while we're not going to have a no trade day. So far, this has been a no trade day, but that can change. That can change in 5 minutes or less. You know, I know in hindsight it's like, well, you could have done this and made money. It's like, okay, well, my decision making is very easy on purpose. For me, it is. It comes very naturally. And if you go bar by bar by bar, there have been 3 or 4 times where I put an order out, been teased, no fill, because it's more range bound than anything. So we've put orders out today, we just haven't gotten filled on any of them. All right, minute 50 left here on this bar. All right, 35 seconds here. Man. Wick, wick, wick. Inside close, inside close, inside close. Well, I'll tell you how we can instantly turn this day around is let's hit 500 likes and then let's give away free account or 2 or 4 if both winners go double or nothing and win. Let's shoot for that. If you have not yet, hit like on the stream. Let's see if we can get there before it's time to go. All right, 3.5 minutes out. Two minutes. Come on now, someone do it to him. Three seconds out. Coming back in for a test here of that 20 EMA. Well, I mean, let's see if it holds up, and then if we can get a bounce off the 20, and it maybe, I mean, it would take, I'd prefer to just see it push through, because it would take a couple of consecutive bull bodies bouncing up out of there for me to even think about getting long. This is quite range bound here. ATR 15.9. All right, 3 minutes, 45 seconds out. All right, I'll tell you guys what we'll do. Two things. Make sure you hit the like button to participate in this. And this is going to be not a traditional giveaway, but I want to do something entertaining here because today has been so slow for everybody, I think, at least for most people trading price action. So, hit the like button to participate. We're going to do a giveaway, but it's going to be a little different. Now, if you are not live, make sure you hit live on the stream so you're actually live with us. Then, you get one entry in the chat. You do not get more than one. If you enter twice, someone's going to call your ass out and you're not going to win. You get one entry. The next 5-minute bar. Whoever guesses the close to the tick. To the tick. You have to write out to the tick in the chat. Okay? Whoever guesses the close to the tick, the close of the next 5-minute bar, the next one, wins a free any size Apex eval. Okay? Get it in. Get it in. You got 45 seconds to get your guess in for the next bar. Actually, I'll tell you what. I'll give you 90 seconds to get your entry in from right now. So you get until 4 minutes left on the next bar to guess the close of this next 5-minute bar to the tick. Has to be to the tick. You get one entry. If you enter twice, you're immediately disqualified. And if we get multiple winners, by the way, we're going to have to figure something out. We'll figure it out. All right. 30 seconds, and then I'm going to type done, and if you enter after done, you are disqualified. As well as, if you enter more than once, you're immediately disqualified, and I will need your guys' help in reviewing all this. 10 seconds to finish up your entry. That's it. That's it. If you enter after done, it doesn't count. So you might as well stop entering. Let's see how this bar closes up. Now, wherever it closes, I will need to crowdsource your help to determine who got it right, if anybody. And did they enter more than once? And I am going to check as well as other people, so let's take a look. All right, 3 minutes here. And by the way, if somebody does win and does not come forward and claim it within 2 minutes, it's done. I'm not going to have people coming back tomorrow like, wait, I won and I forgot. 2 minutes, 25 seconds out. Let's see. Now, obviously, you know, we got to keep an eye on this kind of thing. You could draw like this, you could draw like this, don't overthink it. But for me, 3 consecutive bull bodies after all of this kind of garbage today. I mean, look at all these wicks, right? I mean, this, you finally got a decent close, fades. 3 would be necessary. Minute 25 out! Who's gonna win? Now, if we have multiple winners, we're going to do some kind of tiebreaker, okay? But we got to see if we have any winners, let alone multiple. 35 seconds. All right. 5 seconds. Where do we close up? Okay. Yeah, my closed data. Is it 50? I believe that close was 25, 104.50, correct? Yeah, 104.50. Okay. So, who had 104.50? Can somebody pull up the actual data? My NinjaTrader isn't set up to pull up the actual data because it's I don't like having a bunch of bullshit on my screen. What was the close? No, pull up the actual data. Don't just look with your cursor. I can do that. Yeah, it's not 25, guys. You can tell. And by the way, I can't middle click. I disabled that. So, does everyone agree? The close is 104.50. All it takes is one of you guys to pull up the real data and tell me. Otherwise, I have to go pull up my Thinkorswim and find it myself. Oh my god, we got a whole bunch of conflicting data here. Maybe this was a bad idea. All right. No one had 104.25 or 10. Now the problem here, honestly, and I should have thought about this. Depend because when you're dealing with time charts, we might genuinely have one data provider saying 104.25 and one data provider showing 104.50 because it rolls over not at a particular data point. It rolls over at a time, and if it's even like a quarter second off, you might have conflicting data from two different data providers. So no one had 104.25 or 104.50 after I said done. Is that correct? Let's look here. Yeah, Brandon. It looks like Brandon McLovin. The problem is I'm seeing 104.50 on my data. Brandon McLovin had 104.25. All right. Brandon McLovin And if we had a third, oh, this got sloppy quick. Are you guys both here? I think Lauren might have had it too. Nope, Lauren had 25,104. Was her entry. All right, Brandon and McLovin, you guys both had 25,104 and a quarter. My data is showing 25,104.50, though it seems like Trade of 8 may have shown 104 and a quarter. Brandon and McLovin, are both of you guys here? You have 60 seconds to say yes. Otherwise, you're disqualified. Yeah, this was maybe a bad choice as far as it. Good intention, but I didn't think that data is going to be different depending on the data provider. Okay, Brandon and McLovin, both you guys are here. Brandon and McLovin, here's what we're going to do for the tiebreaker. You understand? We are going to go over to the golden bar on the 1 minute chart. This is our typical tiebreaker. This is a 1 minute chart. We're going to do not this one, not the next one, because we're too close. So let me wait till this rolls over. Brandon and McLovin, the next 1 minute bar, not this one, the one after this. I need one of you to pick bullish, one of you to pick bearish. Whoever enters first wins if you both want the same one. Doesn't win the account, but wins that selection. One of you is bullish, one of you is bearish for the close of the next 1 minute bar. This is called the golden bar tiebreaker. The 1 minute bar after this one. Does it close bullish or bearish? I need both of you to come to a decision here very soon. Okay, Brandon had bullish first, which means McLovin, you are bearish. Okay, that's how this works. Too slow. Brandon's got bull. McLovin has bearish. For the next 1 minute bar, the golden bar tiebreaker. And whichever one of you wins gets the account. The free Apex any size evaluation account. Let's see here. That was hectic. All right, here we go. This is the bar. This is the bar. Brandon, you are bull. McLovin, you are bear. Let's see who wins. "36 seconds. And if it closes as a doji, you both win. Just a heads up. Ooh. McLovin, I don't know, brother. 14 seconds. Here we go. Brandon, you are the winner, big dog. Brandon's the winner. Brandon, are you here? Brandon, you are the winner. And Brandon, I am going to give you a choice. You have won yourself a choice, you understand? This doesn't happen every time for winners, but I'm doing it for you. Brandon, would you like to go on your own? Another golden bar for double or nothing? And I'm serious. I'm not going to say, oh, it's okay, you win anyway. Double or nothing. 2 accounts or 0, or do you want to take your account and run? Brandon's taking it and running. Good choice. He's not a gambling man. Brandon, go hit the free Discord. Just join that up, and I will add you as a friend. Say, hey, it's Brandon. You can join at the link in the description. Say, hey, what's up? It's Brandon. I will add you as a friend and get you your account. And in the meantime, let's head back here to the 5-minute chart. All right. All right, 4 minutes, 15 seconds out until the close here of this 5-minute bar. Brandon, waiting for you to join up and say, hey, it's me. Give me my shit. And I will give you your account or the code to use to get the account for free. The eval. There you are. Brandon beat me to it. All right, brother. Brandon, I just added you as a friend. Go ahead and accept that. All right, 3.5 minutes left on this 5-minute bar. Finally getting a little bit of movement here. All right, Brandon. I'm sending you a message that says, hey, reply to that. Whoops, I caps locked you. Reply to that with a screenshot of you logged in to your YouTube account. And he's way ahead of me. Brandon knows what is up. All right, big dog. There is your code. Use it in good health. All right. Hey, for the rest of you big losers. Just kidding, you will be a winner here shortly enough. I am sure of it. Apex 80% off is back. Extended. Use code BIG, B-I-G. You go hit that up at Apex. It'll give you 80% off. You can pass in 1 day and be funded as early as tomorrow. And the lifetime activation fee is discounted to $85, down from $140. If you're looking more for daily payouts, Take Profit Trader is going to be your best bet there. And Take Profit Trader with same code BIG is 40% off, and you will not pay an activation fee when you pass, which is a really big deal. All right, guys, I'm off to lunch. Stay patient. Let the setup come to you. That's been the story of the day here today. But when it does, don't be afraid. Hit it hard, accept the outcome like an adult. All right, guys. Hey, see you back here tomorrow morning. We'll be doing the same thing, hopefully with a lot more action. Subscribe to the channel on the way out. See you guys tomorrow. Pharaoh Friday, baby. Giveaways tomorrow again. See you here. Bye-bye.